So here is the list: personal account, real account, and nominal account. Personal account would contain the liabilities and assets. So capital account, that is a person is going to introduce some money in the business. So in that case, it is going to be his money. So it is called as his capital. So capital account will be a personal account. A person is going to give capital. So capital will always be having credit balance because credit the giver. Drawing is always going to receive. That means a person is going to receive certain money from the business. So drawing will always have a debit balance because it's a debit the receiver. The person is going to receive certain monies from the business. Then bank account, wherever the company is going to maintain its bank account, or any bank, any other company, those all are considered to be the personal accounts. So living beings, artificial entities are covered under the personal accounts. Then creditors and debtors, those they are the living beings or they could be artificial entities, will be covered under the personal accounts. Moving on to real account, those are containing cash, all the assets like the machinery, land, building, goodwill. Then here, no, maybe certain intangible assets like the trademark, copyrights, patents, geographical indications, premises, computer, furniture. Those all things are covered under the real assets. So those assets which are there are considered in the business for utilization to earn certain income out of it. So we are going to utilize machinery for the purpose of business processes, and that's it's going to be a real account. The next we consider is the nominal account, in which there is expenditure and income. Some are expenses and some are considered to be the income. Like the salaries made, wages, audit fees paid, traveling expenses done, advertisements, then the discount. If discount we receive from our supplier, we are going to make it as income. If discount we provide to our customer, it's going to be our loss on monies. So it's going to be our expense from that angle. It's going to be a debit for the same. Golden rule you are supposed to learn, and golden rule you are supposed to remember, and journal entries won't be passed, won't be able to get so easy if you do not know the golden rules. So let's immediately learn all this, get those rules. Personal account rule: debit the receiver, credit the giver. Real account rule is debit what comes in, credit what goes out. And nominal account rule is debit all expenses and losses, credit all income and gains. So like this is going to be the rule major. No, these are the golden rules which you are supposed to remember. Now the next we are going to start with journal entry, and immediately we are going to learn the ledger as well. Rupees 50,000. So cash and capital, those are the two accounts which we considered. So cash introduced, so that means cash has been entered in the business. So it's cash debit what comes in. Cash account is debited to capital, that is credit to be given, credit the giver. Goods purchased for cash rupees 5,000. So it's goods we have purchased. That means we have paid the cash and we have made certain expenditure towards purchasing goods. So purchase account is a nominal account, cash account is a real account. And that's why it's going to be debit all expenditures and losses. So purchases account debit, to cash goes out of the business, cash will be credited. For the journal entries, there is always going to be one at the debit side and another at the credit side. You will always have a compensating entries for debit. You will find there is one credit. It is nowhere possible that all the entries are appearing to the debit side and nothing comes on the credit side. It's never going to happen. There can be two entries at the debit and one at the credit, and the entries, the total should accordingly match. So eventually I'll come to that kind of transaction as well. Pay commission rupees 200. Cash and commission are the two accounts which are considered here. We are going to pay commission, and by way of paying commission, we actually pay cash. So cash is a real account and commission is our expenditure, and that's why it's going to be the nominal account. So for cash, we are going to apply the rule of the real account. For commission, we are going to apply rule of nominal account. So cash in this we have paid. That means cash has been out of the business. Credit what goes out, cash would be credited. Eventually commission will be debited, but let's just understand the logic behind the same. Nominal account, a debit all expenditures and losses. So commission is our expense, it should be debited. So commission account debit to cash. Remember the rule for ledger folio, whatever comes first, here the cash is 1. So I'll mark it as 1. Capital at the second number, so I'll hit 2 here. Purchase comes very first time here, so nowhere it was above in the transaction. So I'm marking purchase as 3. Cash has again entered in the transaction. So for the cash, I have already given the reference of 1. So I'll repeat the same number here as 1. Commission account has appeared for the first time. So I'll mark is after 3, it's going to be 4. And again, cash is there. So it is going to be marked as 1. Cash account is going to be there again 1, and sales account is going to be number 5. So whenever a new transaction appear, new account appearing, we are going to mark new number. If it's already existing number, we are going to utilize that existing number. Yesterday we had seen this contra entry as well. So August 23 cash deposited in the bank. If cash deposited, that means it is going to be out of our business and bank is going to receive the amount. Cash is going to be a real account and our bank is going to be the personal account, because any bank, say SBI. So if we deposit into SBI, so SBI is going to be a personal account. It's an artificial entity. So cash we deposit, that means cash is going to be out of our business and bank is going to receive the amount. And that's why debit will be given to bank, being it is going to receive. So for bank, we are going to apply personal account rule. For cash, we are going to apply real account rule. So cash goes out, cash will be credited and bank is going to receive. So debit the receiver, bank will be debited. Exactly opposite entry will be there if we withdrawn from bank. Now in this case, cash is going to enter the business. So debit what comes in, cash is going to enter the business and bank has given us the money. So bank is the giver, credit the giver. I hope the logics are clear to you. And after this, let me just confuse you more by mentioning this much of accounting cycle. So wherever there are going to be any purchases, acquisition, expenses, borrowing, sales, whatever the transactions are happening, we are going to make the journal entry. Once we do the journal entry like the above, the above one which we have considered, after this journal entries, we are supposed to post to the ledger accounts. Once the ledger account is done, we are going to move with the trial balance. And in the trial balance, when it is done, we are going to start with the final accounts. So it's not going to be just easy thing. Accounting cycle, journal entries, ledger and trial balance. This is going to be the normal scenario. What are the advantages of journal? So important advantage is this journal is going to give a complete information about the business transactions. So what the transaction is there, we are going to consider this all transaction into first is whether it's an asset, it's an income, it's an expenditure, or it is going to be a liability. We are going to segregate that. Then we are going to pass the entry with respective date, with respective amount. And again, we are going to give an explanation for the transaction by way of narration. So being rent paid, being a goods sold for cash, being salary paid, being commission received, whatever other transactions. So the one journal entry is going to give a complete information. And it is also including a brief explanation of the transaction by way of narration why we have passed the entry. And since it is the double system we have following, one at the debit and another at the credit, there are very, very less chances that any mistakes would happen. Now to make the correct entry of your business transactions, following is the procedure. Sorry. Yeah. Following is the procedure adopted. First of all, we have to identify the accounts. Then we are going to classify them, all the accounts, and identify them as nominal or real personal. Apply this rule of debit and credit to the accounts and recording them in the journal. And along with that, we are going to put the narration. Let's check this sum. A big sum, and I will be solving this sum for you. So please be patient and properly understand all these transactions. Let me just where should I write this? Now, right hand side here, I have just marked few transactions, and on the left hand side, here are the journal entries which I have passed. Okay, so let's check. So it's December 22 transactions. So this is entire this month of December, and we are going to pass the entries for the month of December. X started business with cash rupees 10,000. So now the business is started with cash. So cash is going to enter the business. So it's cash account. Fine. It's cash account debit to capital account. Going to be X started business with cash. So cash has entered the business. Cash account debit to capital account rupees 10,000. Debit what comes in. So cash has entered the business and X has given the capital. The next is paid wages rupees 4,000. So now here the wages have paid 4,000. Wages is a kind of payment made to the factory workers. There is a difference between wages, salaries, and remuneration. I'll clarify this thing. The persons who are working in the factory towards the production process will be given wages. Those wages can be daily wages, can be weekly wages, or can be monthly wages. Wages are given to factory workers, salaries are given to office workers, and remuneration is given to all the top management and directors. So these are all the payments only from the company to the employees overall. The employees are categorized as the factory workers, office employees, and the management. To the factory workers, to the factory workers, it is going to be the wages. For the office worker, it's going to be the salary, and for management, it is going to be the remuneration. So wages paid here 4,000. So wages paid, debit all expenditures and losses. So no wages will be debited, and because of it, the cash goes out of the business. So cash would be credited, being wages paid in cash. So next is purchase goods for cash rupees 40,000. So here I have made the purchases of goods. So again, because of purchases made, my cash is going out of business, and purchase is going to be the expenditure for me. So debit all expenditures and losses, purchase account debited to cash account. Next entry is purchase goods on credit from Ajit. Now here specifically it is mentioned that it is the goods by which we are purchased, but we have not paid cash immediately. Rather, we have taken those all goods on credit. So here, purchase goods on credit from Ajit rupees 30,000. So here goods are purchased, but we have not paid. Rather, Ajit has given the goods. So here Ajit will be entered. Like purchases we have made. So debit all expenditures. So purchases are made. And who has given the goods? That is Ajit has given the goods. So Ajit, personal account rule, credit the giver would be there. So Ajit will be credited rupees 30,000. The next transaction is of machinery purchase rupees 12,000. So we are by way of purchasing machinery, we paid cash. So logically, clearly, machinery is going to enter the business. Machinery is also a real account. Cash is also a real account. So machinery, debit what comes in, machinery comes in. Credit what goes out, cash goes out. So it's going to be machinery account debit to cash. Next is interest paid rupees 200. Interest is our expenditure as because we have paid it. So it's going to be expenditure, and by way of paying interest, we have paid cash. So interest, apply nominal account rule, cash, apply real account rule. So for nominal account, it's going to be, so it's going to be the debit all expenditures and losses. So debit or the interest, and cash will be out of the business. So interest account debit to cash. After this, machinery sold rupees 9,000. Now machinery we have sold. In that case, machinery is a real account. Cash is also a real account. Now we are going to get the cash because now machinery is sold and machinery is going to be out of the business. So it's going to exactly opposite entry now to the purchase of machinery. Was earlier when machinery entered, now it's machinery going out of the business. So the entry would be cash account debit, that cash has entered, to machinery account, machinery we have given out. So that means machinery goes out of the business. I suppose I missed one entry. Yes. Dividend received rupees 170. So when we receive something, it's going to be our income. And that's why the amount would be received. So cash received by way of dividend. So here cash what comes in. So cash account is debited to dividend account. Reason dividend is a nominal account. Dividend received, that means it's going to be our income. So debit all expenditures and losses, credit all income and gains. So we are supposed to give credit to the dividend. So the entry is going to be cash account debit to, where is this entry? Yes, cash account debit to dividend account. Then this rent to cash being rent paid. So we paid rent, that means by way of paying the rent, we have actually actually passed on cash to the out of the business, and that's why cash goes out of the business, cash is credited. Rent account is an expenditure, so nominal account rule debit all expenditures. Yeah. So next here is goods sold to Ramesh, rupees 50,000. Now we have sold the goods, that means it has been our income. So it's going to be sales account is going to be our income, credit all income and gains, nominal account will be credited. And Ramesh has received the goods. So Ramesh is being given debit. Reason being Ramesh is a personal account and Ramesh has received the goods. So debit the receiver, Ramesh is debited. Sales is the nominal account, credit all income and gains, sales is credited. The next transaction is being goods sold for cash. So here we have sold goods and we have received cash. Again, because of this cash, because of this cash sales, that means we have sold goods and we received cash immediately. That means cash has entered the business. Debit what comes in, cash is debited. To sales account, we will be given credit because sales is our income, credit all income and gains. Some logics are there. Now, some logics I would give you, that's a thumb rule you would say that purchases account will always have the debit side because purchase is always going to be our expenditure. So it should always be given on the debit side. Sales account would always be at the credit side, because sales is always going to be at the so purchases account is always going to be at the debit side. Sales account is always going to be at the credit side, because purchases is always an expenditure for us. So debit all expenditures and losses. Sale is always going to be on the credit side, because sale is always going to be our income. Now, purchase return. That means we purchase something from the supplier, but for whatsoever reason, maybe we don't require those goods, the goods are of poor quality, or these are not as per the specifications. For whatever the reasons, we are sending back those goods to the supplier. That means whatever we have purchased, now we are going to return this material, maybe fully or partially. So now in this case, we are going to consider this as a purchase return. So in purchase return, these goods are always going to be there, and we are going to receive monies. Say from Mr. X, we have purchased goods from Mr. X. Now, for some reason, I don't require those goods of worth rupees 50,000. I want only 20,000 goods, and I want to return the rest of 30,000. So I'll keep 20,000 with myself, and the goods worth rupees 30,000, I'm going to give give this as a return to Mr. X. Now in this case, these goods, when I return worth rupees 30,000, I'm going to receive income, because I should get my monies back. So in this case, purchase return account will always have the credit balance, that is credit all income and gains. The same logic applies to sales return account. Here, sales return account is maintained when here goods return to creditor or supplier, and here goods returned by debtor oblique customer. I hope now these things get clear. So sales return, that means we have sold goods, and now our customer has returned goods to us for whatever reason. Maybe our goods are of not good quality. Customer don't require those goods, so customer is going to give these goods back to us. Now in this case, because of the goods are getting back to us, we have to pay to the customers, because whatever the goods the customer has sent back, we are supposed to pay the customer for that particular amount. So sales account is always going to be on the debit side. Debit all expenditure and losses. Now we are supposed to pay back to the customer. Next, capital account will always have credit balance, because capital is always be given by someone. So capital account is credit balance. As exactly against that, drawings account will always have the debit balance, because drawing is always going to be received by someone, the main businessman, and that's why it's going to be on the debit side. Now, wherever certain accounts are debited and sometimes they are credited, like cash. Cash is the such one, whenever purchases are made, cash will be credited. Whenever sales are made, cash is debited, because cash may come in the business, cash may go out of the business. We are supposed to analyze the transaction, and then we are supposed to pass the entry. Now, there is a logic behind marking this cash everywhere as red color. Okay, why I now mention this cash account in red color? There is a reason behind the same. I'm going to go with the ledger balances, how the ledger account, how the cash book is prepared. Okay, I'm going to show you how cash book is now prepared. So just below this, I have prepared cash account. Okay, So it is in the books of X, and this cash account I have prepared. So wherever these entries are going to be there, I have to consider entry one by one. So here cash account and debit account to capital. So on the debit side of cash, I have to maintain two capital account. Let's first analyze what ledger account is. So after these journal entries, we are supposed to pass the ledger account. Ledger account will be like this. It will be having one side as debit and another side as credit. The account is divided into two columns which are of equal. If you check its date, here is the date. Particulars, here are the particulars. The journal folio, here is a journal folio. The amount, here is the amount. So everywhere they are going to be same on left side and right side. Left side is considered as the debit side. Right side is considered to be as the credit side. Wherever the cash transactions are there, from which we are supposed to analyze this entry. So here cash account is always debited. So cash account will be at the debit side here. Now, if you analyze one more time, whenever cash is entered the business, say by way of getting the capital, by way of selling, by way of interest received, or maybe by way of dividend received, by way of rent received, by way of commission received. So whatever and whenever cash is received by the business, all entries will automatically come at the debit side. See, the capital account we checked. So capital account we received cash. By way of this dividend we received dividend. By way of machinery we sold machinery, so we received cash. By way of sales we made sales and we received cash. So these all transactions are such in which the cash is received in a business. Check the credit side now. Cash account, here we paid wages, we made purchases, we purchased machinery, we paid interest, and we paid rent. So wherever we are going to make payment, always all the entries would appear at the credit side. I hope these things are getting clear to you. So wages, purchases, machinery, interest, rent. If you check the about transactions now, let me just get this clarification one by one. I'll mark in different colors simply to understand how this entry went there. Cash account debit to capital account. So on the debit side of cash, we are supposed to write to capital and have mark here as to capital as the yellow color. Fine. Then next is wages account debit to cash account. So here cash goes out of the business. So wages to cash, this transaction I'm marking purposely with this color. This color is not visible. Yeah. So wages, that means on the credit side of cash, I have to mention wages account. So here is the wages at the credit side. The third transaction, purchases account debit to cash. That means here cash is been out of the business for making purchases. So purchases account debit to cash, cash is out of the business. At the credit side of cash, we are supposed to write the purchase account. So it has to be there with 40,000 rupees amount. It would be there. Look, these purchases is been there at the credit side. Now, next entry, purchase account debit to Ajit, will not appear. Reason being, there is no cash involvement in the transaction. Here, cash is not paid. The purchases are made on credit. We have not made the payment immediately, but rather we are going to do it after certain period of time in future. So no cash involvement, will not come this entry in the cash book. Machinery account to cash, Again, machinery we have purchased and we have paid the cash. So on the credit side of cash account would appear here machinery. So it's going to be here. Oh, I did not mark it with some specific color. So machinery account, and here again machinery, we have paid for machinery. Next, interest account debit to cash. We have paid interest. Again, it's a payment from our side. So wherever there are going to be any expenditure, we are supposed to consider these as the payment from our side at the credit side. So interest account you will find at the credit side. Now, cash account debit to dividend. We have received dividend. Cash has entered the business. So cash account debit to dividend account. Here we are considering cash entered. So on the debit side of cash, we are supposed to mark as the dividend received. This is something we call it as the ledger accounts. Likewise, we are supposed to do all the accounts. After this cash book, we are supposed to maintain the purchase account, capital account, machinery account, sales account, wages account. We are supposed to maintain each and every account like this. So wherever this cash account is there, we are supposed to again make the second ledger as the capital account. Likewise, all the entries would be passed in the ledger accounts. I'll go to next numerical. As the journal entries in the books of Aradhya Enterprises Limited and prepare purchase account, sales account, and cash account for the given period. We are specifically asked to maintain cash account, purchase account, and sales account. Let's check one by one. October 22 transaction, 5th, cash sales 40,000. Immediately, we are going to see ledger accounts as well. So cash sales, that means we have received cash and we have got the sales. So it's going to be cash account debit to sales account as the journal entry. Cash we received by way of sale. So it's going to be our incomes by way of sale. So credit the sale. The entry would be cash account debit to sales. So on the cash account debit side, we have mentioned two sales, 40,000. Okay. This is a transaction. Here is the posting to sales account. Now, when we mention at the sales account, the second entry would go to sales account. That means cash account debit to sales is the transaction. So on the debit side of cash, we are maintaining two sales. So the second effect will be given on the credit side of sales. So on the credit side of sales account, you would find here that buy cash. So cash paid. These transactions will be having double effects. The second one, cash purchases. That means we have purchased goods and we paid cash for the same. Yeah, you'll get this kind of transactions again and again. I'll explain. Then cash purchases. So cash purchase in which we have purchased the goods and we paid cash. We paid cash. So in that case, purchases account debit to cash is going to be the entry. So purchases account debit. Now I'm supposed to mark debit on the debit side of purchases account. I'm going to mark to cash 23,000 because I have paid the cash and I have received these goods. And for this 23,000, second effect will be given to cash account because I have paid the cash rupees 23,000. So this transaction Purchase goods from Tina, rupees 12,000. Now we have purchased goods. That means purchases account debit to Tina because Tina has given goods to us. So now purchases account debit. On the debit side of purchases, you would find Tina account. Here to Tina, rupees 12,000. Now, since we are not maintaining Tina's account, we are not going to write the second effect because in this example, we have been asked only for preparing the purchase, sale and cash account. Next, sold goods to Megha, rupees 34,000. Here we have sold goods. That means sale has happened and Megha has received those goods. So Megha is going to receive Megha account debit to sales will be the entry because Megha, the receiver, Megha is going to receive the goods and sale is going to be our income. So Megha account debit to sales. So Megha, we are not going to maintain the account because it's not required as per the sum. So sales account on the credit side, we will find by Megha, 34,000. Cash purchases, again here both the entries would appear because it's a cash and purchase account. You would find entry for the same. So it's cash purchases. That means we have purchased goods and we paid cash. So it's going to be purchases account debit to cash, rupees 17,000. So purchases account debit on the debit side of purchases, you would find to cash 17,000. And on the credit side of cash, you are going to mention as the buy purchases. This is the posting which you are going to do on from journal to ledger. But Megha paid the sales amount, right? So why not sales account debited? The question, Tej Shiralkar, we have sold goods to Megha. So Megha is going to pay afterwards as it's Megha has not paid immediately. So it's going to be sold goods to Megha. Whenever there is any name mentioned, it is assumed that it is going to be a credit transaction. And if it is mentioned that sold goods to Megha for cash, then in that case, assume that it has been in a cash transaction. If for cash, by cash, such kind of words are not mentioned in the transaction, assume these transactions are happened as the credit transaction. Now, like these, all transactions would passed in the journal account. So from ledger journal account to the ledger postings will be done in this manner. I have shown you some 5-6 entries as to just give you a brief as how the transactions are getting posted.